Our next speaker is here. We teased him at the top of the show today. Ian Seelig. He's the AVP of Investor Relations at Safehold. There he is. Ticker is SAFE. Ian, good afternoon. How are
Hello
you
there,
doing today?
Spencer. How are you?
Doing well. How are you?
Doing great. Thanks for asking.
I believe we have your slides,
Great.
or you have your slides. Or you have your slides. Can you reshare?
I would be happy to. Tell me if that's working for you.
It's working for me. Yes, it is.
Look at that. Look at that.
Look at that. Alrighty. So last time when we had we had your colleague on at the top of the show, Jay, CEO. We talked more about collectibles and the philosophy. Here we're going to talk a little bit more about the actual company. Let's get
Exactly. We take a little bit of a deeper dive.
Yeah.
Hopefully our virtual audience had a chance to see Jay's presentation. It's quite compelling. But yeah, what we're going to do today is we're going to take a deeper dive into Safehold, what exactly we do, and what kind of sets us apart from other players in the commercial real estate market. So first of all, I just want to say I'm delighted to be with you all today to discuss Safehold, which is really a truly unique investment opportunity in a world of Me Too ideas. Hopefully, many of you did get to see Jay's presentation this morning. And like I said, we're going to, get a little bit more granular into Safehold. So today's presentation is really broken up into two parts. The first walks through our business model, but then most importantly, the second describes the investment in SAFE. I think we'd all agree that before we ever decide to make any investment, it's really important to understand the fundamentals of the business behind it. So to begin, Safehold is the first and only publicly traded company that's focused on owning a portfolio of ground leases. We are traded on the New York Stock Exchange and our ticker is SAFE. Now, many of you may be familiar with ground leases, but for those of you who are not, allow me to offer a brief primer about ground leases. So what is a ground lease? Really easy to understand the structure. Any piece of commercial real estate is literally just two components. It's the land and it's the building that sits on top of that land. And in a ground lease structure, we separate those components and one party owns the land, and that would be us at Safehold, and another party leases that land for a long duration, typically 99 years. The tenants of that building are, in effect, the owners of that building. They're under a triple net lease, meaning that they pay the taxes, the maintenance, the insurance, and any capital expenditures. However, any net operating income or profits that building throws off is theirs to keep. However, at the termination of the lease, not only does SAFE get its land back, but it gets the building and all its improvements back as well. So you have to ask yourself, why would a real estate investor consider such an ownership structure? Because we're all somewhat hardwired to believe that you must own the building and the land together. Well, a simple way to understand Safehold's business is to realize that every time someone's buying a property, they're really buying those two things. They're buying the building and they're buying the land. But those are very, very different investments. The building is the higher return operating part of the business where all the leasing, designing, marketing, and managing needs exist, making it a very active investment. The land, conversely, is the quiet, passive, lower return part, much more like a high-grade bond, in fact. And the truth of the matter is there's really no other place in the investment world where those two types of investments are forced to be together. Think about this. In the corporate world, you do not have to buy the bonds of a company to buy its stock. That would be considered senseless, entirely inefficient. But that's what's been happening in real estate because there's never been a nationally scaled company with investment grade ratings to acquire that land component and do it in a way that actually enhances the value of the building. And that's our value proposition, and the math is pretty compelling for building owners. By selling that relatively low return land to Safehold and by creating a properly structured ground lease, owners earn a much higher return on their buildings, and they do it with less risk. And as you will see, it's really a win-win for all of us. Safehold ground leases have created three really important efficiencies for building owners. First, there's a capital efficiency, because now that we understand that the land and the building are very, very different investments, they really need to be capitalized differently. Next, there are substantial cost efficiencies that are associated with the various friction costs every time that building sells, such as mortgage taxes, brokerage fees, all which are entirely based upon the entire purchase price of both the land and the building. And lastly, and maybe most importantly, there is significant maturity risk reduction on a large portion of the capital structure by replacing it with near permanent capital. So this whole idea of separating the land from a building via a ground lease has actually been around for centuries, and over that time has proven to be one of the greatest wealth creator for a very elite group of landowners. In New York, where I'm from, the Chrysler building is under a ground lease today. Cooper Union University owns the land underneath that building. Trinity Church owns much of downtown Manhattan, and a lot of Wall Street is sitting on ground leases. The Empire State Building used to be under a ground lease a few years ago. Some of the wealthiest families in New York have attained their wealth because some patriarch, 100 years ago, realized like that land was going to be worth a lot of money and was able to pass that wealth off from generations to generation. Hawaii, which is the diagonal picture to New York on the slide, Queen Kamehameha about 200 years ago put most of Hawaii under a ground lease. London, another fantastic example. The Duke of Westminster bought most of West London 150 years ago. At that time, it was primarily swamplands and apple orchards. Today, they receive over £1 billion in ground rent every year. One of the best examples of a ground lease is that picture on the bottom left of the slide, which is Hong Kong. The British leased that land from the Chinese, built this megapolis on top of this tiny island, and literally handed the keys back to the Chinese in 1997. But quite candidly, these ground leases of the past have been, have had really an awful reputation, to be quite candid, because they had contained negative provisions such as arbitrary rent resets, required permissions for just about any improvement, and were really written to be extremely one-sided toward the landowner, which would make these leases value destroying for the buildings, not value enhancing, and created two things that the markets despise, which is uncertainty and ambiguity. So at Safehold, we recognize that no one has taken this fundamental idea and modernized it to work in today's capital markets. But there's still more that makes any business really revolutionary. Many of the biggest and best companies today are being built by rethinking how things have historically been done and delivering fundamentally better solutions while delivering a better customer experience. Think about for a moment what Amazon has done for retail. Think about what Uber and Lyft has done for the taxi service. Think about what Venmo and PayPal has done for payment processing. Utilizing this proven formula, Safehold is literally taking a $7 trillion real estate industry and making it more efficient while delivering a better customer experience. This idea is revolutionizing the way property owners think about their buildings and the land underneath them. So let's see how our portfolio has penetrated the market since our inception. At Safehold's IPO just a little over 4 years ago in June of 2017, our portfolio consisted of $300 million of ground leases. Safehold really gained traction in 2019 by closing $1.8 billion of deals and grew our portfolio to approximately $3.6 billion today. And since we are focused on the top 30 markets in the US, the best locations in the United States, I think it's meaningful to take a moment and appreciate the caliber of the institutional quality properties that Safe invests. So the ground leases on this slide are just a sample of the types of properties in the top markets which Safehold has closed since our inception, all with high quality, world-class customers and sponsors. In fact, out of the nearly 100 assets in our portfolio, half of them are with repeat customers, which is really evocative that our capital solution is working for them. And quite frankly, it's very validating for us as well that our thesis is being proven out. So now that you all have a general understanding of Safehold's business model, let's get to the fun part and kind of why you're all here today and learn why Safe is such a compelling investment. So as I just mentioned, 4 years ago, we took Safehold public, and something really extraordinary happened. By putting a ground lease investment in a public vehicle, we democratized this investment. So what do I mean by that? Typically, ground leases were the domain of churches, royal families, universities, and other enduring institutions because, quite frankly, who has 40 or $50 million to park for 100 years? I know I don't, but I do have $90 to buy a stock. Now, for the first time ever, we have made this investment available to the individual investor, you and I. And not only that, we can express our opinion on ground leases every day. We can go out into the public markets and buy safe stock, and we could do it on a daily basis. Think about that for a moment. We have given a 100-year relatively passive investment, and we have given that daily liquidity, and that is powerful arbitrage. So Safehold was taken public by iStar, who's been in the real estate finance business for nearly 3 decades and completed more than $40 billion of real estate transactions. Not only is iStar Safe's founder, but it's also its manager and largest shareholder. Clearly, having iStar's years of expertise in real estate finance, sale leasebacks, and net lease, along with their robust ownership position, is extremely important in Safe's ongoing successes. iStar has offices throughout the country, and I think we all know that real estate is a local business and it's a relationship business. But most importantly for us investors, an investment in Safe contains 3 of the most significant characteristics that any investor should seek, something that I should like to call the trifecta of investment attributes. So let's review that for a moment. The first attribute I think that we should focus on is principal safety, which is just a way of saying, let's make sure that our capital is well protected. Our Safehold ground leases are literally one of the safest ways to invest in real estate since they occupy the senior most 30 to 40% of the capital structure. Akin to taxes and utilities, you must pay your ground rent. Our safety in this investment was clearly battle tested over the pandemic, where we received 100% of our ground rent throughout the COVID pandemic. And I think that's really evocative of the principal safety that's embedded with this investment. So the second attribute, which is really the first component of value in this investment, is growing income that's achieved through long duration, contractually escalating cash flow streams. Our ground leases are structured with 2% annualized rent bumps that compound over the life of the lease. And I think we all understand the power of compounding. It's a page out of Warren Buffett's playbook. I think Albert Einstein called it the 8th wonder of the world. When you compare comparable AAA-like bonds with a similar duration, this 2% compounding bump structure within Safehold's ground lease portfolio creates excess returns exponentially greater than other investments with similar risk and maturity profiles. I'll get a bit more specific about these cash flows in a moment. And lastly, the second component of value that's derived from this investment is this whole notion of capital appreciation, which is kind of just another way of saying, how can I get wealthy from this investment and then be able to pass that wealth off on to my children and for generations to come? Well, to understand this attribute a bit better, let me remind you what I had mentioned at the beginning of the presentation, that at the expiration of the lease, not only do we get our land back, but we get the building and all its improvements back as well. Now, I know many of you are thinking, hey, I'm not going to be around in 99 years, so why does that really matter to me? But in a moment, we're going to examine that store of value in a bit more detail. And you're going to understand why this is such an extremely important part of this investment. So let's go back for a moment and talk about these cash flows. As I mentioned earlier, the land is akin to a AAA bond. However, when you compare the compounding escalating cash flows of Safehold's modern ground lease portfolio to the returns of very similar investment instruments, typically very long-term high-grade bonds, we can generate approximately 200 basis points of excess value. A great example is MIT's 100-year bonds. They're traded in the market every day with significant volume. And as you can see, that's that gray bar on the bottom of your slide. Those bonds traded approximately 3% or 3.1% yield to maturity, while our ground lease portfolio generates about 5.2% yield to maturity. Now, in this AAA CMBS world, if you can generate 10, 25, 50 basis points more than your peers, you would be the best performing manager on the street. However, we're literally generating 200 basis points wide, and that's remarkable. In fact, I don't believe that there is another 100-year compounding escalating cash flow stream in existence today with that type of growth. Now, let's get back to that second component of value in this investment, the capital appreciation piece, which is embedded in Safehold's ground lease portfolio. So as you can see on this slide, when we IPO'd in 2017, we had $400 million worth of buildings that were sitting on top of the land that we owned. As of today, that value is approximately $6 billion, reflecting a compound annual growth rate of 92%. And while that store of value is not ours today, it will be someday because of these ground lease reversionary rights. We often like to compare this UCA account to a 401k. Many of us have these types of liquid accounts. We can't touch them yet, and hopefully we have some smart folks managing that money for us. So full stop for a moment, and let's take a close look at the slide again. And just imagine you had $400,000 in your 401k 4 years ago, and it has now grown to $6 million. It's quite clear to me that you'd be hard-pressed to find any other investment to have such significant growth. Importantly for our investors, we are presently working on strategies to monetize this unrealized capital appreciation account without having to wait until these leases terminate. However, it's a bit premature to discuss this now in great detail today, but this UCA account will be an extremely powerful element in this investment as the business continues to scale. And we really plan on spending a lot of this year going out into the investment world and talking to our investors and the financial community about the importance of this UCA account. That being said, something that we can all kind of wrap our heads around is SAFE's overall stock performance since our inception. So let's review that for a moment. So as you can see on this slide, when SAFE IPO'd back in 2017, we IPO'd at $20 and we closed yesterday at $88, growing 340% since our inception. The four middle bars in the chart represent the four follow-on equity offerings that we've had in the interim. And I would certainly be remiss not to mention that SAFE has been the #1 performing NAREIT member stock for the last 2 consecutive years. We've recently been awarded investment grade credit ratings from both Moody's and Fitch, and that has allowed us even more flexibility to access capital and will position us for even further growth. So what is the scope of the opportunity that lies ahead? Well, as I mentioned earlier, it's our estimation in the top 30 markets in the United States, there's approximately $7 trillion of institutional quality commercial real estate. Now, if you were to take 35% of that, which is the approximate value of the land underneath those buildings, that leaves an opportunity set of approximately $2.5 trillion. And by the way, that is a big opportunity set. Look, it's great to be the first mover in any business. I think we would all believe that, we're running the field alone right now. We have no other publicly traded competition, but I really want to sum up by saying Safehold is revolutionizing real estate ownership by making it better, more efficient, and reinventing a big part of a $7 trillion industry by offering our customers higher returns with less risk. And for the first time ever, we have made investments in ground leases available to the individual investor, you and I, an investment that provides principal safety, growing income that's achieved through contractual cash flow streams, along with the opportunity for significant capital appreciation.